Hello and welcome to India Market Open. It's midweek and we're gearing you up for trade. You've got 2 days to go before expiry. The market's, of course, aiming for it to be a good one. Yesterday, though, didn't seem too bad, guys.
Yeah, and if you were a Bitcoin watcher, it didn't seem too bad this morning as well. 57,000 and counting on that one. I'm stuck with Bitcoin somehow.
Yeah, I think you've made some very good investments at the right time.
How I wish, how I wish.
No, but on that note, the fact is that global cues were not really saying much either way. In the Gen Z lingo, it's meh, as they say. But, there's that wait and watch mood. Nothing too negative, nothing too positive. Consolidation phase, perhaps, when it comes to Wall Street, a tepid movement all around. Wait for the kind of data that will give the next leg of direction. So you saw that cautious mood on Wall Street, very small gains, if at all, for the S&P 500 and the Dow. Most of them flat, NASDAQ slightly up in the green. You see what the 10-year is also doing, and small slide up ahead of all of that data which is coming in. Interesting moves on crude that we saw, and you had a statement from Biden saying that he expects by March 4th there will be a ceasefire. There is an agreement that in Gaza there will be a ceasefire during the holy month of Ramadan. So that might see crude cool off a bit. There's also this anticipation that OPEC Plus will extend their production cuts for the next quarter as well. So that would be the next driver as far as crude is concerned. On the Asia front as well, not too many major cues. We should pull up and see what the Nikkei is doing, because after hitting new highs every day, a bit of consolidation this morning, a bit of pull up, but mixed cues from Asia. So I'm not sure that there are too many cues from global markets that Indian investors will take today. Let me just pull up fund flows also while we're at it, because yesterday DIIs were buying. FPIs continue to be sellers in equities, not in debt though, as Samina will tell you in just a bit. Debt is a whole different story, but on the equity side, FPIs continue to sell. Yesterday about 1,500 crores, DIIs bought about 2,800 crores. So the big movers and shakers perhaps will not be taking global cues today, Niraj. It will be based on the domestic stories.
Yeah, most certainly. And even on the domestic story, here's some, I was just thinking, because yesterday we spoke about how the market is this narrow candles almost every single day. So I was trying to think about what's happening over the last 2 months, and practically nothing. But the interesting small data point. So is it a buy on dips market? That's the question that a lot of people ask. And here's some data to kind of exemplify that. Look at the Nifty levels. On the 15th of Jan, we were at 22,097 on a closing basis. We scaled down to 21,238, eventually at about 21,616. So if you take a 1 month account of Jan 15 to Feb 12, around 1 month, we dipped about 600, 650 odd points. Look at what happened in the next or the subsequent week. From Feb 12th to Feb 16th, we scaled back the entire 600 points. So it's just taking a very little time to swiftly pull back on any kind of downticks that are happening. Is that why the larger populace believes that this is a buy on dip market? Maybe so. I mean, so it's an interesting thing. It's too short a time frame, but it's something that we observed most part of the last quarter of calendar year 23 as well. It is devoid of large volatility. If you look at the VIX numbers between 14.5 to 16.5, so hardly any moves there. Even today, if PCR, for example, is at 1, exactly 1. So there is no difference between the call writers and the put writers on the Nifty sentiment. And that's why the index is fairly flat. Maybe that's why guest after guest who's coming on the platform or the channel is saying that we are not trading the index, we are trading other things. And what are they trading? Well, amongst other things, real estate certainly seems to be right up there. Was the best performing index last week, was the best performing index yesterday as well. Giving company to real estate was infrastructure. And a clutch of infrastructure stocks had a really smart move in trade yesterday. Look at a KNR Construction, PNC Infra, GR Infra, Ashoka Buildcon, 2-3-4%, the kind of moves that came into for each of these stocks. But the KNR was up about 5% in trade yesterday. We have this table, if I'm not wrong, which shows KNR, PNC, GR, Ashoka, and just the kind of moves that they had yesterday. Very strong moves in the session. So maybe from an equity side, infrastructure also becomes a pocket to watch. But clearly, Samina, there is lots happening on the debt side as well.
Yeah, and you talked about infrastructure. There is an interesting InvIT that opens today. We'll talk about that in a minute. But yeah, debt markets. So while we've been talking about how FPIs have been selling out of Indian equity markets, and the rupee hasn't been declining. So you might have noticed that despite foreigners selling equity markets, the rupee has actually remained fairly stable. It's only down 0.4% for the month of Feb. Now, why is that happening, right? So while there is a sell pressure coming in from equity markets, guess what FPIs or foreigners are buying? They're buying into the Indian debt market. Indian debt market record inflows coming in from foreigners stands at a 6-year high. So for the month of Jan, they bought debt, Indian paper, to the tune of $2.5 billion. Feb, we're almost at the end of Feb, they've bought about $2 billion of Indian paper already. Now, this comes in on heels of India's inclusion in the JP Morgan and Bloomberg index. Both these inclusions will draw funds to the tune of $30 to $35 billion in the Indian debt market over the next 10 months. A couple of factors that you want to keep in mind when you read all this information. Very slowly and gradually, passive funds have been buying into the Indian debt market, not just in Jan and Feb, but this really started in October, and hence it's very easy for us to collate the fact that this is happening largely on back of this inclusion. What does this do for the currency? Remember, the RBI has been very active in managing the currency historically. The rupee, like I said, has declined very marginally, and it's been the 3 least volatile currencies in 2023. And 2023 was a tough year for a lot of currency markets. What are we expecting? We're expecting that the rupee may continue to remain range bound. Even though you have $35 billion of funds coming in over the next 10 months, the rupee is not expected to appreciate too much. A stronger rupee doesn't do well for a country like India. Like Niraj and Tamanna had indicated yesterday, one big reason Japanese equity markets have been doing well is because of a weaker yen. Very similarly, a stronger rupee will not garner well for Indian equity markets or Indian exporters, and that's not good news for the RBI. And hence, while you're seeing this big chunk of money coming in, the rupee will continue to remain fairly stable and may see a little bit of depreciation over the course of the next 8 to 10 months. So that's the debt market, but we've got a whole lot of stocks as well, I believe. So yeah. A quick check on implied Nifty before we move on to equities and stocks that you want to track this morning. Vodafone Idea is stop recall. We've talked about this for the last few days, but that's implied Nifty indicating to a flat start. So don't expect fireworks in trade this morning. It's been a tight range. It's been stable, actually. And I think that's what investors will be taking heart from. Traders, of course, finding it hard to find opportunity in a market such as this. Well, on Vodafone Idea, the board has approved an equity fundraise of 20,000 crores. Now, that's a huge sum of money coming into a company that is cash trapped and finding it hard to make ends meet. Who's giving the money, when this money is happening? Of course, we'll take you through all that and talk to an analyst to understand what this means for the telecom sector, what it means for Vodafone Idea and Indus Towers as well. They've also said that they're looking to raise 45,000 crores via a combination of equity and debt. They've also made commitments that they may be able to complete this fundraise by the coming quarter. The fundraise will be used to increase their coverage of 4G, 5G network rollout, capacity expansion, and of course, running and operational use as well. The promoter will be participating in this fundraise. Remember, the promoter has been very clear in the past that they're not looking to exit Vodafone Idea, even though things are looking tough at this stage. What will this mean for Indus Tower? Their receivables will hopefully come through, and that could garner well for the company. Just a quick word, Indus Tower has entered the NSE ban list as of yesterday. So this morning, you will not have an opportunity to trade this one in the F&O space. So just a word on that. Well, Z is back in the news. They have been in the F&O ban for the last few days. Very stable moves. You're not seeing too much happening on that stock. It trades close to 173 rupees. I guess no news could also be good news for this one, but this morning they've once again reiterated what they said yesterday, that they've approved, the board, we believe, has approved a committee to strengthen. The committee will, of course, look at it, be an independent advisory committee, which would include investigation, assessment. That is going to be the primary responsibility of the company. So now, whether or not this means anything for the stock, but it is a news point that we are highlighting for you this morning. Another smaller one, but worth a mention, because counters like these usually react to order wins such as this, GE and TD. The company has secured a order worth 370 crores from the Power Grid Corporation of India for the supply of 765 kV shunt reactors for various transmission system projects in India. The stock will be up and about in trade is what we're expecting on back of that pretty big order win. But I'll toss it over to you guys and then talk about the InvIT that opens this morning that I'm quite excited about.
Yeah. Clearly, and both big stories. Vodafone, of course, will be talking about in a lot more detail. That 45,000 crore target is the big one. I just wanted to point out one thing on Vodafone. From FY25, their AGR bills begin. Remember, they had a moratorium, but they still have to pay it. FY25 onwards, they have to pay 5,000 crores. In FY26, it's about 30,000 crores. So even if they do end up raising 45,000 crores through a combination of debt and equity, they are going to be presented with a bill of 35,000 crores, which will go to their largest shareholder, which is the government of India. So how does that all pan out? We'll have to see. And just a quick word on Z. We spoke about it before. It's the same advisory committee that they announced a couple of days ago. They've rebranded them as the investigation committee. The same questions emerge that if it's your committee, your guys, are they going to really investigate allegations of wrongdoing against yourself? So I don't know if that's going to really give a lot of confidence in terms of the corporate governance issues that he is facing. But Patanjali is the other one which was in the news. So the Supreme Court has made observations and come down quite heavily on the Ayurved business of Patanjali, saying that you're making claims which are incorrect, misleading advertisement, etc. What we want to clarify is that this will have no bearing on any kind in terms of revenue, business hit, etc. for Patanjali Foods, which is a separate listed entity, and I thought it's important to make that clarification that Patanjali Foods is a separate business altogether. I don't know if there's going to be a sentimental hit or not, but definitely a stock to watch. SJVN is the other one, and as renewables, solar continues to be the flavor of the season, SJVN is in the news because they've bagged a 100 megawatt solar power project at a tariff of 2.64 rupees per unit. This is with the Gujarat Urja Vikas Nigam, and the cost of the project is about 642 crores. So SJVN may be in focus once again. The stock was up yesterday as well. All cargo logistics is the other one I want to talk about. And we've been consistently mentioning the Red Sea crisis, the Red Sea crisis. What is it actually doing to companies? So they've come out with their monthly business update, which is definitely showing impact. It's delayed shipments for all cargo logistics. The volumes have reduced by 3% for the month, and the biggest hit in terms of volumes is in LATAM, Europe and America. India volumes, though, have increased in Jan. So you might see a further hit on all cargo logistics. They were down about 2% yesterday. But a few more on your radar, Niraj?
Yes, there are a few stocks. So for example, this one, Torrent Power could be an interesting one in the session today. So it's emerged as a successful bidder for a transmission project in Sholapur, the project to evacuate renewable energy with a capacity of about 1,500 megawatts, and that's a large one. It's also one of a kind thing that Torrent Power has gotten into because they are getting into the transmission project for the first time. It entails setting up a transmission line of approximately 44 kilometers. So this could be interesting for Torrent Power, so do watch out for this one. A key stock to monitor in the session today. From amongst the brokerage notes, and there are various notes on Vodafone Idea, Bharti Airtel, etc. But I thought the Dream Folks note from Motilal Oswal was interesting. They've initiated coverage with a buy rating and a target price of 650 rupees per share. They expect benefits from rapid growth in the Indian airline industry, expected strong 20% revenue and 28% PAT CAGR over FY24 to 26. So this is the other interesting piece as well that they are talking about. 28% PAT CAGR is really interesting. And well, they are venturing into international markets, according to Motilal Oswal, as a lucrative long-term opportunity. So do keep a keen eye out for this one as well. So Dream Folks is certainly something that one should keep a keen eye out for. The last one is BLS International. Columbia Petchem has bought 21 lakh shares at 373 rupees per share. It's an entity associated with Aditya Kumar Halwasia, who recently bought a large stake in TFCI, you remember, and associated with many other large investments. So it's just the name associated with this bulk deal in BLS International, which may evoke a response. So do watch out for BLS. Was up about 2% in the session yesterday. Let's see if there is more in store for BLS. And of course, there is an eye out for the delivery-based buying that we saw in a clutch of stocks like Uniparts, Railtel, Mahindra Logistics. Look at the kind of price and volume action that we saw in most of these. Ganesh Housing, interestingly, was up 10% day before yesterday and was up about 5.5% yesterday as well. So 3x the 1 month average, but up about 16-17% in the last 2 days. So do watch out for some of these stocks. Could be interesting. ICICI Lombard too. Yes, ICICI Bank bought into it. And that's why the volumes and the price activity yesterday. Could it do an encore? Remains to be seen. But an interesting move in some of these stocks.
Even some of these defense names were looking pretty good in the charts. So your BDL, HAL all had a pretty solid run in trade, and on charts they seem to be ready for a breakout. But we'll talk about that and more with our analyst in the next hour. But one interesting piece that has been around for a while, and these are infrastructure investment trusts, more popularly known as InvITs. Now, these have been around for a very long time, but they're recently gaining popularity, one with ultra HNIs and also with retail investors. So if you're looking to play the India growth story, the proxy of all these order wins, road construction, port construction that we very often talk about, the one other way to do this, besides buying an equity stock or investing in an infrastructure mutual fund, is actually investing in an investment, which is an infrastructure investment, more popularly known as InvITs. Like I said, InvITs are very similar to mutual funds. They are traded, the only difference being that you can actually buy, and they're bought in units, just like you buy mutual funds. The key difference between an infrastructure mutual fund and an infrastructure InvIT, or an infrastructure investment trust, is both of these, while a mutual fund can of course invest in various assets or equity companies, and InvIT can only invest in infrastructure projects. Their payouts as well are different. They pay out a dividend. They go into projects that are completed by regulation of the SEBI. So a lot more safer, a better risk-reward ratio, and also a lot more liquid. Why we are talking about this is because there is Bharat Highway Infrastructure Investment, which is an InvIT. The IPO opens today and closes on the 1st of March. They've already raised 825 crores through a bunch of very big investors, institutional investors largely. The expectation is that this one will open today, garner 2,500 crores from the public markets, and will look to list in the first week of March. Interesting, if you're looking at playing this sector, if InvITs is something that you're looking to diversify your portfolio with, this might be a good one to consider, guys.
Talking about IPOs, Juniper also debuts today. Juniper Hotels IPO. It's a tie-up between Saraf Hotels and Hyatt, and 1,800 crore IPO, 360 is the issue price. It was subscribed 2 times on its final day, so that's one to watch out for.